remarks. Thank you.
Thanks, Bob. Thanks, Aaron. Good evening, folks. My name is Mark Doxer. I'm the current chair of the Reading Select Board. I want to welcome you all and offer my thanks for joining us to discuss economic development for our town. Just to quickly acknowledge, I know my fellow board member, Ann Landry, is also attending this evening, and some other members may join. Quick shout out to Lisa Egan as well, not of the board, but also participating. From my perspective, I think Reading has made a really good start working on downtown improvements, bringing together downtown businesses into a committee that hopefully will become a more formal organization, and encouraging downtown residential projects to include storefronts and hopefully even some restaurants and some other retail activity. Supporting local businesses has really been a challenge in the world of Amazon and also other developments in neighboring towns. COVID-19 clearly has taken this challenge to a much higher and more difficult level. I see the challenge as first for survival, but very importantly also for thriving in the land of COVID and beyond that, obviously, as well. The Select Board is committed to addressing the challenge and keeping it very much front and center. This is one of the core goals established for the town manager and town staff for this fiscal year, and certainly going beyond that as well. The challenge of offering more downtown parking for shoppers is on our plate to address in the January timeframe. And looking at the potential of new spaces in town for both community activities, as well as the potential of opening up a large commercial space, perhaps around the RMLD and DPW sites, have been important parts of our discussions and things that we'll be bringing forward to town meeting for further exploration. I'm very excited by this summit, excited by the great speakers that Aaron has brought together to share with us tonight, and the potential to really encourage volunteers to help us in our mission. Please stay involved. Please let Aaron, town staff, select board know if you'd be interested in participating more with us. Thanks again for all your interest and engagement. And with that, I'll pass it back to you, Aaron. Thank you.
Thanks, Mark. And now I'd like to introduce our keynote speaker for the evening, Barry Bluestone. Our keynote speaker, Barry Bluestone, is a political economist and professor emeritus of political economy after a 50-year career in higher education. He served as a founding director of the Dukakis Center for Urban and Regional Policy at Northeastern University. As a political economist, he has written widely in the areas of affordable housing, urban and regional economic development, income distribution, among many other topics. He also consults with civic organizations, community foundations, industry groups, housing developers, trade unions, and various federal, state, and local government agencies. As Bob mentioned, Barry prepared the economic development self-assessment tool, the EDSAT, in 2013, and is obviously familiar with the town of Reading economy. So with that, I'd like to turn it over to Mr. Barry Bluestone for his keynote presentation. Thank you, Barry.
Thank you. I'm glad to be back in Reading. We had a wonderful time almost 7 years ago when we did the first EDSAT. The Economic Development Self-Assessment Tool, as I'll explain in just a few minutes, was something that we developed at the Dukakis Center at Northeastern. And in it, during its period of time, we had over 115 towns and cities in Massachusetts, as well as about 30 in other states that took part in it. And from that, we learned a great deal about what makes economic development work. So what I'd like to do is very quickly share my screen so you can take a look at what I've prepared for you today. And looking back, as I say, at Reading from 7 years ago. As I said, in 2013, the town of Reading asked the Dukakis Center to conduct the Economic Development Self-Assessment. So today what I want to do is look back at those results, but also look forward as to where Reading is today and some of its strengths, as well as some of the challenges. I did go back and I looked at what we had seen at that time in terms of the number of establishments in Reading itself. In 2001, almost 600, because of the decline in the economy as a result of the 2007-2008 recession, it fell to 572. And when we were actually in Reading doing the economic development self-assessment, it was back to 586. Employment similarly fell from about 7,300 to about 6,000, but by 2013 was at a new record of about 7,500. Again, these are jobs in Reading, not the number of people in Reading who are at work. Let's take a look. However, I decided to take a look at some Department of Labor statistics to see what has happened as a result of COVID. So you'll see I looked at 2013, 2016, 2019, and then February of 2020, just before COVID really hit hard. And you'll see that total employment in Reading had grown very rapidly to about 14,000, but by July 2020, it was down to 11,800. If we look at the unemployment rate, you'll see the unemployment rate had fallen to just 2% just before COVID hit. In a state which had some of the lowest unemployment rate, we were actually even below the state level. But of course, once COVID hit, we had 12.6%, or about 1 out of 8 employees had lost their jobs as a result of COVID. So let's take a look at what Reading looked like way back in the period we were studying it, from 2001 to 2013. We're looking at the change in the number of establishments, and try and keep this in your mind as I go ahead. Across all industries, there had been a loss in establishments, but there had been a large increase in healthcare and social assistance, in accommodation and food service, that's hotel, motel, food services. Professional and technical service establishments had grown, arts, entertainment, and recreation. At the other end, we had lost construction establishments, real estate, and administrative services. If we look at employment, overall employment was up 182 jobs between 01 and 13, but the bulk of that was in retail, trade, and accommodation and food services. Right there, about 1,600 new jobs, with a net increase of only 182. We were losing jobs in construction, in manufacturing, even in professional technical services. Remember that, because we're going to come back to that. So let's take a look at what EdSat was all about way back when we were doing this in 2013. The economic development we found was a collaborative process that builds on strong adaptive economies, but it requires good leadership. Companies move to municipalities, not states. We talk with literally hundreds of firms and companies that do site locations, and they said, you know, we'll come to Massachusetts, but then we're looking at Reading versus, let's say, Burlington. And municipal officials therefore play a critical role in playing up what's strong in your own city. We also have thought today, with federal deficits due to COVID-19 stimulus spending, and even a call for tax cuts, there's going to be little additional aid to local communities from the federal government, and perhaps not from the state government. The result will be local economic development is on your own, and you have to find ways to attract business enterprise to your town in order to maintain your tax base and, of course, create jobs in Reading for the people who live there and elsewhere. We came up to the conclusion, again, you have to be the CEO for economic development. You have to begin by assessing your municipality's strengths and weaknesses, which we do with EdSat, and then most importantly, change what you have control over and collaborate with others in the state, the federal government, over things you might be able to influence. But the proposition was that cities and towns have the ability to create their own destiny, and they can benefit from having sophisticated partners in doing that. So as I said, under EdSat, we started by surveying corporate real estate and development professionals, and out of that, we created a very large assessment tool, an electronic survey that Reading filled out in 2013. The goal, if you have some deal breakers and you do a city self-assessment, you take appropriate city action, you can turn those deal breakers into deal makers. That was the whole idea behind EdSat. What were some of the deal breakers that the business community told us about? Well, ignorance of changing market conditions, the importance of time to market. Business moves at the speed of light. They can't wait forever to get a permit that they might need. The other thing is that uncorrected cognitive maps. We can think of towns and cities in Massachusetts, and if I just mention them, you probably have a cognitive map in your head about it. A Lawrence, a Lowell, a Lynn. On the other hand, a Newton, a Brookline. Where does Reading's cognitive map fit in? Too little attention to some site deficiencies can hurt your chances. A slow municipal process can hurt. And as we found out, too much reliance on tax breaks as a way to attract business. It doesn't work that well. So we had in the survey categories, the permitting processes, things about labor, development and operating costs, the business environment, transportation and access, the quality of life and the social environment of the town. And we therefore had 10 areas that we looked at, everything from access to customers and markets, to the concentration of business services, accounting and legal services, the cost of land, labor, the municipal process itself, quality of life in the community, the quality of life on particular sites, business incentives, tax rates, and access to information about your town. So let's go back and see what we learned in 2013 based on the EdSat that Reading completed. Well, lots of strengths. Very good highway access. Compared with what we call the comparison group municipalities, traffic in Reading is basically comparable, but has regular access to a traffic engineer. It has capacity for growth and reliable service in terms of all its utilities. Its mix of office space includes more Class A and Class B space than some of the comparable municipalities, indicating better overall quality office space. Has a much higher percentage of managerial and professional workers than other comparable towns and cities. More than half of Reading's available labor has earned at least a bachelor's degree. It has some public transit. It's attractive. Its quality of office space is good. And it had some sites available for development. Predictable permits. Reading provides a development handbook to prospective developers. It allows for citizen participation in the review process, but elected officials have tried to expedite development by facilitating community group dialogues. It has cultural and recreational amenities that you know well. Crime was lower than in other towns and cities. The home ownership rate is higher, and the local schools are very good, particularly in terms of having their students do well on things like MCAS. In terms of the local tax rate, local meals tax to pay for local services, a flat tax rate that is 4% lower than others. Commuter rail, proximity to universities and research. The town manager has played a significant role in facilitating the permitting process, which we found out was very important. Has a very good website that prospective firms can take a look at. On the other hand, there were some weaknesses we found relative to other communities. Timeliness approval, site plan review, zoning variances, and the appeals process take an average of 4 weeks longer in Reading than the average for other comparable groups, comparable towns. Rents in Reading for all asset types and classes, other than the cost for Class A office space, is somewhat higher, Class B, Class C. Again, this is 2013. A smaller proportion of Reading's available sites for retail and office sites have long-term on-site parking, something that I know you're trying to deal with now. Reading does not have a good, at the time, did not have a cross-market strategy where the town and business organizations and community organizations would all work together to kind of market Reading to the world. Reading has very little land available at that time, including a low percentage of large parcels that could be used for industrial commercial. Reading does not have a checklist of permitting requirements for prospective developers, which other towns develop, and developers like to see that. Though the state has a lot of special tax incentives, Reading does little to help firms take advantage of them. Other communities have leadership that helps prospective employers, firms access state incentives. Doesn't have tax increment financing, at least back in 2013. Housing, relatively high cost relative to some of the other communities around there. A lower proportion of fast food restaurants, fine dining, daycare, again, compared with others. It has not, back in 2013, supported public-private partnerships or adult education programs. That may have changed since then. And at least way back in 2013, it didn't have a designated webmaster or staff person for maintaining its website. It doesn't have a vocational school within its jurisdiction, but has one close by. But what really matters? So we looked at those 105 towns and cities, and we ran a significant amount of statistical tests comparing, on the one hand, how much employment growth did you have in that town? How much establishment growth did you have in that town? And what factors seem to contribute to more rapid economic development? Okay. And what we found was the factors, and these are correlation coefficients, and this was done on 50 Massachusetts municipalities. And what were the factors most highly correlated with an increase in establishments? Interestingly, and I had no idea when I started this what these would turn out to be, was simply economic development marketing had the highest correlation, about 0.37. Those communities that really worked hard at marketing themselves to potential businesses did better in attracting establishments. Timeliness approvals had the second highest correlation. Those communities that had a process to speed up the process for zoning, doing any kind of zoning changes that might need aid or dealing with building codes, did better in attracting establishments. Having parking available on site was important. Public transit was important. Cross-marketing between the business community and the town was important. Low traffic congestion turned out to be somewhat important. Fast-track permitting, again, one of those things having to do with timelessness approvals and site availability. So, what actually stood out for Reading? Public transit, low traffic congestion, site availability. Where was Reading weak back in 2001 to 2011 in attracting establishments? It didn't have a full-scale economic development marketing plan yet. Its timeliness of approvals was slower than other comparable towns and cities. It lacked the kind of parking, and it didn't have a strong cross-marketing, right? So finally, how is Reading doing today? First of all, recall what were the key employment growth sectors between 2001 and 2013. It was retail trade, hotels and motels and food service, healthcare and social assistance, other services excluding public administration, finance and insurance. Okay, now let's look at its progress since 2013, but of course before COVID-19. What have been the sectors that have the largest growth in employment? Well, computer systems design, architectural and engineering services, construction, leisure and hospitality, healthcare, and arts, entertainment, and recreation. That is a dramatic change from what was growing only 7 to 10 years ago. In terms of those industries with greater than 100 employees, where have you seen rapid change? A 48% growth in employment in arts, entertainment, and recreation. A 38% growth in employment in credit agencies. A 34% increase in employment in Reading and construction. And then in healthcare, nursing homes, leisure and hospitality. So my point is that there has been only a modest increase in total employment between 2013 and 2020, between the time we did EdSat and today, but critically shifting from food and beverage stores, insurance carriers, and finance agencies to what? Computer systems design, architectural and engineering services, construction, leisure and hospitality, and healthcare. This is all part of the broader American industrial transformation, and Reading is taking its share of those new sectors. Nearly a 50% increase in arts, entertainment, and recreation, more than a third, as I said, increase in employment in credit agencies, more than a third increase in construction, and at least 1/5 growth in ambulatory healthcare. But nearly a 70% decline in insurance, nearly 1/4 cut in social assistance jobs, 1/5 loss in financial services employment. Again, a changing structure of establishments and employment. So, finally, moving toward the future, in a post-COVID world, if Reading can continue to attract new firms in the computer field, in architecture and engineering, in the arts and healthcare, as it has since 2013. Reading has a bright future. So what are the things to think about? Continue to update your comprehensive economic development plan. Continue to pay attention to the timeliness of the zoning process. Work with the business community to market Reading as a good place to live and a good place to work. Thank you. So I hope that gives you a little bit of thought. I was thrilled to be able to come back to take a look at Reading again 7 years later and see how it's changed and how it's moving into the future. I look forward to hearing your comments.
Thank you so much, Barry. I just wanted to now introduce our first panelist speaker, Jeremy Syria. And we, again, will have an opportunity to ask questions of Barry and our other speakers as well tonight in our question and answer and the panelist discussion portion of the evening, which will begin shortly. So back to Jeremy Syria. Jeremy Syria is the CEO and founder of Mansard, which is a commercial real estate and brokerage firm. Over the last 19 years, he has become an expert in commercial real estate sales in Massachusetts and New Hampshire, negotiating the sale of more than 1,000 properties for his clients. He has served as the president and senior instructor at the Certified Commercial Investment Member, CCIM Institute, in commercial real estate finance and market analysis. He will be parting with us a little early this evening, so I just wanted to remind attendees that we will be taking real estate questions in the question portion of this evening first, followed by other topics this evening. So with that, thank you, Jeremy, for joining us this evening, and we're looking forward to your presentation.
Well, thanks, Erin and Barry. That was an awesome opener, sort of bringing the history of Reading up to today. In fact, the time frame that you covered is pretty much the length of time that I've been working as a commercial real estate broker in the Reading market, serving the business community there. So I've seen a lot of that transformation happen that you talked about in your your economic analysis there of the town. So I'm hoping what I can do here is to sort of carry that forward and bring us down into the real estate market. And the big question I had is what does the real estate market look like today in Reading in relationship to not just the commercial market, which is made up primarily of the office, industrial, retail, and flex market, but also made up of apartment housing, single family housing, and condominium housing. So what I did was really ask this question. I said, well, what's going on in the town in relation to the space side of things, and that's sort of the first kind of easy thing to tackle, because we have great supply side information, but what is it that drives demand for space in Reading? And it's people equal demand for space, and so when people equal demand for space, people have all different types of needs and uses and requirements for space. So what we wanted to do is to sit down and ask the question, well, how has the population in Reading been changing over the last several years, but in particular since March of 2020, when we hit the pandemic, and it just really shifted our entire focus. So this is an infographic. A lot of information here for the town of Reading. And what this is showing you is the last 10 years of historical population trends in the town. And what you'll see is there's been, since 2012, a growth in population in Reading. And the population today is projected to be somewhere around 26,365 people, with about 9,700 households in the town. Now, what's interesting about this is when we break down the kind of composition of the town, the average household size is 2.68 persons. So it's not a full 3 people living in a housing unit, but the average is about 2.68. And the reason why that's important to look at is because when people move into the town, they're forming a household. And we look at the household information as a core unit to measure against for identifying what population growth or contraction can look like in a market and how that correlates to demand for space. So let's take a look at what this has done. We went to the US government and took advantage of the Freedom of Information Act to ask the question, how many people have actually moved into Reading or out of Reading since March of 2020? Now, not an easy question to answer because it's such a tight focus. So we researched this a little bit, and what we were able to do was to get a hold of an employee at the US Postal Service in Memphis, Tennessee, filled out some information and requested the last 4 years of in-migration and out-migration numbers for the town. And so basically what we found is that approximately 39% of the population growth in Reading, according to address change information with the Postal Service, has happened since March of 2020. And so the data behind that basically says that if you take the average household size, which is that 2.68 people per household, and we look at the number of net gain household changes. So what this means is you have people who move out and you have people who move in. And when you move out of Reading, you file an address change with the Postal Service. And when you move in, you file an address change with the Postal Service. Over the last 4 years, there's been a 643 net gain of households added to the Postal Service data. And so what we did was we said, if you take that information and you assume that about every household that's coming in, if they're on average, how many more people are we seeing? You've seen 664 people move into Reading since March of 2020. Over the last 4 years, it was 1,723 approximately. So what that says is that about 39% of the growth in population has happened since March. So when we take that information, we ask the question, well, how does that impact the real estate market in Reading? The first thing we did was we zoomed out a little bit to look at what's happening in the greater Boston market. So this first chart you see is a chart of what's happening as a forecast for the second quarter of 2021 for the retail market in the greater Boston area. And you'll see here on the chart, there's a big circle on 13. And that 13 represents the halfway point into a hypersupply phase of the market. What the hypersupply phase of the market says is that you're going to see rents in the market softening, okay? You're going to see vacancies increasing, and you're going to see new construction projects are delivering into a softening market environment. This is a projection for what the retail market in the greater Boston area will look like in the second quarter of next year based off of current modeling using the pandemic impact on the space market. The apartment market is at the same position. The forecast is to be out at the 13 point on the market cycle chart here. So we're looking at a hypersupply phase. This also says that the Boston area should be experiencing a softening of rents and an increase in vacancy in the apartment market. Now, what's sort of critical here is to look at this in relationship to the urban-suburban separation. Living in Reading is not the same as living in South Boston, for example. So what we're seeing for rents in Boston, this is according to RealPage. They are a software company that provides property management software to the apartment industry. They published this data within the last 10 days or so. And what they're seeing is that in-town Boston rents have contracted by 5.3%. So we're seeing in the urban portion of the market in the Boston area a contraction for rental rates in housing, which says that those units are having to compete harder to attract tenants. But some of those tenants are moving to Reading. If we follow the logic of the mailing address changes, some of those people are moving into town. The industrial market is really the most robust market we're seeing in the greater Boston area. This is the chart showing that we're at a peak phase in the cycle. This is typical of very low vacancy rate, rising rental rates, with potential for new construction deliveries to be, in process or to be delivered. And so the industrial market is holding up as I would say probably the most robust sector in the market right now. And then the office market. Okay, so the office market is out at phase 12. So it's just past the hyper supply point in the market. It's starting to soften. You're starting to see some softening in rents, softening in demand. Downtown Boston has seen over 1 million square feet of sublease space hit the market since March of 2020. As a result of that, you're going to see a lot of competition for tenants. And the big question becomes, what does office look like as we go process this virus and we manage this big shift in how people working from home, going into the city to work, or even working in suburban offices. So let's take a look at each property type. And so what I did was I went into the MLS and I pulled out some year-over-year data to look at the single-family market in Reading from 2019 as of yesterday compared to 2020 as of yesterday. So here's what the chart shows us. The single-family market in Reading has seen a contraction in the average days to offer. So what that means is when you put your house on the market, how quickly are you getting an offer on the property? What the MLS has reported is it's happening 9 days faster than it was a year ago at this time. The average days to the property going under contract to be sold is happening 11 days faster than it was this time last year. And the average sale price for sold property has increased from $660,853 to $695,929. So that's a positive variance of $35,000 in single family housing prices. You're also seeing the average sale price as a percent of list price increasing, where you're now seeing offers that are exceeding the list price, and that's gone up by 1.37% since this time last year. So just the supply side information on single family housing seems to be indicating that this population demand for housing has definitely shown up in Reading. The condo market, not a huge change here year over year. We're actually seeing a slight variance where average days to pending is 3 days off. The average days to be sold is about the same. The average sale price has gone up by $11,997, and the average price, the sale price is pretty consistent. So it's only 0.84% higher this time now over last year. So I'm not sure if folks, because I don't sell condos and houses, but the feedback I'm hearing from the developer market is that the condo projects are a little slower now, and it may have to do with people being somewhat adverse to living in density housing versus the single family market, which has really been the choice product in the suburbs as people have been trying to get more space. So how about the multifamily market? All right, so what I did to keep the information really kind of boiled down to an easy metric was I took the total units of apartments in Reading, and then I just took the population. So I didn't segment it out based on who owns and who rents. I just said for the number of units that you have for rent and the total population, what are you looking at on units per capita? So everything I did here was on per capita. The market it's got a 6.1% vacancy rate. That says that there are about 54 units available. The market rent per month is averaging $2,167 right now. So keep this in mind as we go to the next slide, because we just saw Boston is seeing a negative rent change by 5.4%. Now, if we take the information that we got from the Postal Service and we estimate that populations increased by about 664 people since March, that would mean that there's an additional demand if they all rent, okay? Or no, actually, if they don't all rent, there's just additional demand for rental housing of 22 units. So what you should expect to see is that vacancy rate decline as those 22 households absorb those 54 units. So there's going to be, in my estimation, rent's going to stay static or appreciate slightly in Reading. And so the data that we pulled, this is from CoStar, is showing us that there is rent appreciation occurring. I just ran this this afternoon. So we've got a positive rent growth of about 3.8% in Reading. So this is for us, it's corroborating that there is an urban to suburban shift occurring. The population that's moving is driving demand for housing. It's definitely showing up. But the question now becomes, what's the commercial side of the market really going to look like? So retail, similar information. In Reading, you have 53 square feet of retail space per person in the town. And that market, as of yesterday, was 5.7% vacant. So technically vacant, which means there's about 79,800 square feet of available retail space in the entire town. Market rents averaging $25.09 per square foot. So with the population coming into town, what would that mean for retail demand? Well, it would tell us that that population would demand about 35,000 square feet of retail space. Now, there's a big caveat here, because retail is, as you're reading in the news, is one of the hardest hit sectors in the market. And Barry, I think your information is really, really valuable for looking at the employment change, particularly in the industry sectors that are vulnerable to the pandemic, where we have a shift in demand for how people are actually accessing and using retail space. So I think this on the surface says, hey, retail looks pretty good in Reading, but I think it's not going to quite play out this way, as consumer behaviors are shifting more rapidly to online consumption, distribution of product to the home, to the doorstep, and full service restaurants really suffering as a result of the inability to bring people inside to dine, and with restaurant closures coming as rapidly as they are. So the challenge, I think, in Reading for this sector is going to be figuring out how to repurpose spaces, keep them activated in order to keep the town center vibrant and active, with really kind of keeping a sense of community as the center is the real gravity for the town to gather around. Okay, office. So Barry mentioned the office market in Reading. They've got a nice collection of Class A and Class B spaces. Rents are competitive with the neighboring towns. The average space per person in town is actually 20 square feet. So when we look at that with the vacancy rate for office in Reading, 6% vacancy rate is very strong. That tells you there's a lot of tenant demand for space. And $22.90 a square foot for rent. Okay, so on an average basis, that's a pretty strong rent. My thesis here is I think the Reading office market will recover more quickly than the Boston market will. And I say that because I think there's going to be a shift in office leasing strategy. And this could be an opportunity for Reading to get out ahead of that and sort of what Barry was talking about, get out on top of that, economic development marketing messaging that, in the suburbs, particularly in a town like Reading, which has got this awesome infrastructure, the 93, 95 interchange and the commuter rail station, they're just fantastic access points to the town. You've got office space to offer that, frankly, is renting for a third of what you would pay in downtown Boston. So there's a strong profit and loss story to tell employers. Number one. Number two, with population demand shifting out to the suburbs like we're seeing, it's going to make sense for employers to consider a hub and spoke leasing model where they may have a smaller urban office, but then create multiple suburban office presence locations so that their employees can still get out of the work from home, which it's really a live at work situation, and get back into an environment where they can work with their associates. So I think there's an opportunity there. The other thing that factors into the office market is if you go back, and this is a chart from MetLife. They put this together, and I took it out of one of their reports on the office market during the pandemic. They looked back over the last 30 or some odd years at the average space that an employee occupies. And as you'll see, going back to 1990, it was about 280 square feet per employee on average. And by 2019, that had dropped down to about 240 square feet. If you took this back to the 1970s, you would actually see this, it'd be up around 400 or 500 square feet per employee. So what we've seen in the office market is an increasing densification of office use. And the idea there is to become more and more efficient with the use of space, to create more collaborative environments for people to work in. And that made a lot of sense until March of 2020, when the message became, we need to all be 6 feet together or 6 feet apart, however you want to look at it. And now we have this challenge of what's demand for office space going to be. My sense is that we are going to return to the office, but when we return to the office, we're going to spread out more. And as a result of that, if you were to take a typical office demand metric like 240 square feet and even roll it back to a 280 square feet per employee number, that's that same employees demanding 40 extra square feet of space. So you could bring fewer people back to the office and still occupy the same amount of space. They're just spread out more. So I think we're going to see that show up, and that may end up being a buffer in the office market that could keep the office market really, pretty vibrant. And I think it's going to play well for the suburbs, personally. Industrial space. Reading has really not a lot of industrial space and very limited industrial zoning. And as you saw in the chart, the market cycle chart, it's like the best asset class to be in right now, particularly with the shift in retail consumption. So another big opportunity for the town, and I don't know where you put it, but if you could create any zones that would allow for industrial development with your proximity to 93 and to 95 and the commuter rail station, look at, Woodburn's got a very strong base. They've really taken advantage of that industrial product they have. You have some of that, and you could do some really powerful things with it. And one of the things you'll see is when you bring those types of uses in, these are jobs that are typically, basic jobs. They're bringing dollars into the community without putting additional demand on local services. So there's an opportunity to drive more growth in particularly this class of property, which I know it's not really as popular a product type, but it's one that really is a powerful tax revenue engine. It's a powerful job engine, and it's a powerful engine for bringing dollars in for circulation in the market. So that's my story. I'm really honored to be here. I appreciate your invitation to come out tonight to share this, and I'm going to hang out here for comments or questions for the next 30 minutes or so. So thank you very much, and Aaron, it's back to you.
Thanks so much, Jeremy. And with that, I'd like to turn it over to Julie Thurlow for her remarks. I'll quickly introduce Julie. She is the president and CEO of Reading Cooperative Bank and president of RCB Charitable Foundation. Under her leadership, Commonwealth Institute named Reading Cooperative Bank a top 100 women-led business for the past 4 years in Reading. She's also a proud member of the first cohort of Lawrence Leads. Lawrence Leads is a cross-sectoral leadership program that's focused on civic engagement and social responsibility taught by the Harvard Business School. And with that, thank you so much, Julie, for joining us this evening. I'll turn it over to you.
Thank you, Erin. And it's such a pleasure to be here. Thank you for the opportunity. And I think I've always wanted to say the views here are my own, but they are views that are really banking perspective, just like Jeremy was talking about the real estate market, just to see how this pandemic is actually affecting the banking industry and its effect then on the community. But one point I do want to make is that this really is a self-induced recession. It was a health emergency that became an economic emergency, and now we sit here wondering whether another round of relief is going to be provided. But Massachusetts closed on St. Patrick's Day. We at Reading Cooperative Bank reopened in July. White collar workers and most of Reading is still working from home. You see that in our parking lots, right? And one of the things I did want to share that the Federal Reserve and the FDIC have both been very clear with their financial institutions to let us know that they are doing everything that they can, and they're going to give us the tools and the resources to make sure that this medical crisis that became an economic crisis does not become a banking crisis. We all remember what that was like in Massachusetts in the 90s, and in fact, that's when I actually came to Reading. And that is one of their main points that they are making with their financial institutions, and they are encouraging that all of their banks work with their customers as much as feasible. And that's something that I think is reassuring from a community basis. So we opened our branches in drive-up only mode. We actually provided forbearance, basically relief to anybody who paid mortgages and loans to the bank to 23% of our loans. So you're talking about almost 25% of Reading Cooperative Bank's customers were experiencing some type of COVID-related diminishment in their cash flow. 60% of that, interestingly, were commercial borrowers, just like Jeremy was pointing about the difference between the residential real estate and the commercial real estate. The consumers were not affected as much as commercial and self-employed borrowers. During that period of time, we waived all late charges and overdraft fees, and 10% of those same credits are actually remaining in distress at this time. So it gives you a sense of the impact of the crisis on our portfolio, which is predominantly based in Reading. I will say, I do want to share that the PPP process, we ended up writing 600 loans in total. The SBA response, and I know, the news will give you both sides of that story, but for the SBA to be able to stand up a national lending program within a matter of days, and using the banking system to do so was pretty remarkable. We wrote 280 loans the first go around and 300 afterwards, and the loans equaled 2.5 times payroll for small businesses. And we just ended up having a bank-wide event, just celebrating all the work that employees had done during the whole challenges that we were dealing with this spring. And just the remarks that came when people are literally saying to you, thank you for that, the loan funded in my checking account, you kept another small business open, or I can now pay my employees. It's really powerful and emotionally to realize that you're sitting at your kitchen table, possibly in your pajamas at 8 o'clock at night or 7 o'clock in the morning, and you're actually writing a loan that's actually going to keep the doors of a business open, is pretty powerful. But there are challenges ahead. Unemployment is definitely a headwind, and landlords are people too. I put that up there because I think the state has done the right thing and not allowing evictions, but we also need to recognize that landlords do have bills and they do have mouths to feed and they do have mortgages that they do have to pay, and trying to balance all of these different needs within the economy are really a serious challenge as far as the state is concerned. There are sector by sector challenges that I'm going to point out in a couple seconds, but a self-reflection is just the whole inequity of COVID and workloads. As I mentioned, we actually were writing loans until 10 o'clock at night on weekends. The work didn't stop, and other people were out of work. When we think about our parents that are now coming to work during the day or working from home during the day, but they're responsible for teaching their kids at the same time. There's just a tremendous amount of stress in the system in how we work and where we are. If you have any medical malady that makes you even more concerned about being out, all of that affects consumer confidence and people's spending. If you're staying in your home, you're not spending the way that you normally would, and that's having a financial impact on the entire world. Jerome Powell, I actually sent over my deck this morning because he did speak yesterday, and unlike the Fed normally speaking, he actually did include some very dramatic words when he talked about the burdens of the downturn not being evenly shared. When you talk about communities of color, low-wage workers that have to get up every day and go to work, they can't stay at home and work from home and teach their kids at the same time. That just the impact on minorities and even women who are trying to balance double burdens. It's just there are significant challenges that we're all dealing with right now, and really the necessity for a second round of the CARES Act is we can't underscore the need for that. But I will, and I say that because the stimulus really did work. When you actually look at the poverty rate was on its way down. And again, I said that the economic troubles that we're in are self-induced, but they were pandemic-induced. 14% of Americans have lost their job. The unemployment's greater than 19% at the peak. And yet the poverty rate actually dropped during that period of time. So that actually helped families. The stimulus that came in for families and the additional $600 weekly in jobless benefits actually prevented other scars from actually happening in the economy. But the recovery right now is being experienced differently. If you do not have a college education, your reemployment opportunities are diminished significantly. And those are not things, there's a high college graduation rate, there's a high wage rate as far as Reading is concerned, but there are people in our community that do have lower wage jobs, and recognizing that the financial impact of this pandemic is infecting different groups of people differently depending on their education, where they actually earn, and race and gender is something that we need to recognize. And it's sometimes it's easy to, especially if we're working from home, to sit and talk to our computer and not realizing that the harm and the hurt that's actually happening in the economy right now. Unemployment is more harshly experienced in tourism-rich states, and that includes Massachusetts. But when you think about what Jeremy was talking about as far as the commercial real estate market, a lot of things that are happening in the cities right now are not going to be happening for a long period of time. You're talking about service industries. I used to wear a suit every single day. I used to have a bag of dry cleaning every 2 weeks that I would leave and would get picked up and returned. I have sent 3 sweaters to be dry cleaned since we've actually stopped. And when we think about the restaurants that won't be here, the ones that may have been struggling beforehand won't reopen, the hotels and the need for hotels and whether or not we will be traveling. And I think a lot of people presume that doctors' offices are rich organizations, but you need to remember that they're paying wages to people. And if no one's going to the doctor because they're afraid to leave their home, or if they're not scheduling certain things, then those services and those visits aren't happening and people aren't getting paid. Hospitals that are focused on COVID aren't doing surgeries, so there's not billing for those. And retailers were already struggling with the Amazon and the online advent, now are even struggling even more so because they have diminished amounts of buyers that are allowed in their store and people that are willing to go into the store. This is just from the Wall Street Journal, which talks about, what people are seeing as far as the impact of the pandemic on small business, whether it be urban or suburban. So in general, do you believe that small businesses are doing poorly? Yes, they do. Do you actually know of a small business that's closed because of the pandemic? Yes. And just whether or not the small business market, it will take a while. When we actually have restaurants that close, it takes a while before somebody's willing to take the risk. Entrepreneurial risk is significant, and it has an impact on your household. So anything that we can do to keep our businesses operating is something that we need to consider. And this is me editorializing here. If we love our downtown and we love our community businesses, we really need to support them with our dollars now more than ever, whether it's a bigger tip, whether it's that extra meal that you're going to have for a leftover tomorrow. And try to spend as much as you've been spending in the past at these businesses. And that includes our nonprofits and the arts. If we want things to be open and available when we're on the other side of this, then we need to support those organizations now. Going back to the landlords are people, businesses are made up of people, and these people took a lot of risk to open their business, and every day that they're not open is negative effect on their household finances. And on the right-hand side here is just really all the negative detriments to different types of business organizations as a result of the pandemic. And back to some of the comments that Jeremy made, where are people going to want to live? I actually saw an article where people are moving to Boise, Idaho. I think Redding is a lot more attractive than Boise, Idaho, but I don't know. I've never been to Boise. But will we ever really be willing to commute again? And if we're only going into the office 2 or 3 days a week, what does that actually mean when you do the math on that? That means you're only there, 40 or 60% of the time. That means you're not buying lunch at a local restaurant. You're not using the dry cleaner. You're not going to the gym. You're not using the businesses that surround that building. And how long before those office buildings return to capacity? I actually did go to Everything But the Dog and get a treat for the dog, but he's completed that treat, and now he decides that he wants to photobomb. So hopefully I'll be able to get this finished without him being here. So there really is a question about how long before office buildings in Boston return to capacity, or will they ever? There are record-breaking amounts of space available in the sublet market. But this is actually the first pandemic that the construction industry has not been harmed, because usually contractors are the first folks that see the slowdown, but in this case, home office renovations are keeping them busy. As far as commercial real estate owners, as I was saying about the capacity, if half of the Massachusetts workforce isn't expected to return to the office even after vacancy the vaccine is available, what does that actually mean for businesses in the area? Tenants are already renegotiating the space, and our landlords do tell us that they are working with their tenants as much as they possibly can, especially the folks that have lost a household member to COVID or are temporarily out of work. But they do also have people that are taking advantage, and every time the landlord doesn't get paid, that is their personal wealth that is actually disappearing. So going back to my earlier comment that the pandemic has had, and this downturn is really unequal as far as how it's being experienced by people. These are the projected default rates based on the type of industry or the type of commercial real estate that's out there. Obviously, lodging, hotels, retail, and other are expected to take the biggest hit of all. So from a banking standpoint, where do we see things? The PPP loans did generate loan volume for us, since consumers are not borrowing the same way they were, or commercial borrowers are not. We also have had a huge influx of deposits, over 70 million in deposits that have run in our doors. People just seeking safety, a safe place to put their money. And the Federal Reserve does indicate that interest rates will remain low for some time. So we will, as banks, be earnings challenged. We make money on the interest rate margin. It's just not going to be there. Rates are zero bound, tremendous amount of refinancing. So there's a lot of activity, but there's not a lot of earnings tied to that activity. And so you will likely see a lot of acceleration in mergers and acquisitions in the banking environment, growth needed to offset the declines in margins. And I just did want to make a mention that the Financial Accounting Board did make adjustments to the rules for how we actually provide relief to our borrowers, both commercial and consumer, which should avoid the failures that you ended up seeing. I think a lot of the activity that was taken by both the federal government and by the agencies, and just a proactivity that actually occurred as soon as the downturn happened, has really avoided a lot of the financial harm that we were so concerned about right when we shut our doors. As far as consumers are concerned, refinance if you can. Unfortunately, if you've had changed financial circumstances, you will be unable to do so. I will warn you, appraisals are taking 45 days, going back to the inequity of workloads, right? If you're a mortgage originator, you are busy. Major employers are reevaluating their workforce as PPP expires and a second round of funding is actually frozen in Congress. But home appreciation is strong, which that does have an influence on consumer confidence. So hopefully that will forestall a lot. And the only thing that I can say again to consumers that may be on and watching is if you are having financial difficulty, if you've had some financial challenge that's arisen due to COVID, make sure you communicate early and often with your financial institution. And again, back to Jerome, he says it best at all as, there's more stimulus is needed and the sooner the better. He used the word tragic when he actually referred to the need for policy intervention. And in fact, his argument is we need more. And anybody who says we don't want to overdo it, it would be much better to overdo it and have to pull back than for any of the harm that could actually happen to households without it. So thank you for your time and listening. I hope that was of value to you, and I look forward to hearing more from my colleagues.
Julie, thank you so much for your remarks this evening, and thank you to all of our speakers this evening. With that, I'd like to open it up to the question and answer session. I want to also recognize that Jeremy needs to leave us quite soon, and we do have a quick question from our town manager, Bob Lasher, his screen and video will be shared with all of you while he's asking his real estate question, and then Jeremy will part ways with you and we'll continue on our question and answers.
Okay.
And I will again help participants participate once we wrap up with this initial question. And thank you all again.
Thanks, Erin. I'm going to put Bob on. Bob, you can ask your question. I just wanted to say that we also have another question that Jeremy's answered in the question and answer, but we'll take that out loud as well. Thank you, Bob.
Okay, thank you. There's a lot to think about from the three speakers, but one of the things I was weaving through all of your talks is earlier I mentioned how we export workers, and clearly we're not exporting as many workers as we used to, primarily office workers. Pandemic health risks aside, do the speakers see this as a trend in the work culture to be working more at home? And sure, we could offer we could market our office space, but couldn't we also market our businesses to the folks who normally leave Reading during the week to work and suddenly they're home?
So Bob, when you say, I got the first part, which is working at home and that trend, but you also mentioned marketing businesses to people who've been leaving Reading.
Our workers are now going to be home more than they used to be.
Yep.
They won't be shopping near where they used to work.
Mm-hmm.
Why wouldn't they shop now in downtown Reading?
Well, that's okay. So that's a good point, because Julie, you talked a lot about the circular flow of income through your talk, which is great because it's the idea of where the money's being spent, when and why. And when you bring that money back into the household, people are making different decisions about how they're consuming. the challenge may be getting people to come out of the house and form habits in the town center. And maybe that's something the town can work with the business community to message people in town that, look, if you're not at work, you're not buying lunch and ordering your dry cleaning to be done and going to the gym while you're at the office in the financial district or Seaport district, wherever you go to work. Here are some strategies of how we can embolden that population to support the local business. I mean, it's sort of, local's always been a cliche, but there's actually an opportunity to redefine what local really is right now. And I think, Bob, that's sort of what you're getting after. How do we do that as a town? How do we engage the residents to put some of that money into circulation? I think there's definitely an opportunity there. The question on the office piece, just like this has shifted brick and mortar retail more rapidly to e-commerce consumption, which was happening, but it was an accelerant. This has also done that to the office market. But I think the office market, it comes back. It won't be exactly what it was. I think people are going to be, you're going to have fewer employees in larger spaces. But at the end of the day, I think what we're going to get down to is there's a lot of productivity that gets done in the office. And as a guy who's fortunate enough to have an office 1.3 miles from his house, who has 4 kids, 9 and under, I wasn't getting any work done at home in March. And I came to the office about a week into this thing, and I was the only one here working. And it's the only way I could get deep work done. So I know it works, and it's going to play out. The larger the organization, the more challenging it's going to be. The smaller companies can come back to work in the office faster because you just have fewer people to manage. You have fewer COVID issues to overcome. When you get a large organization, one person comes in, 15 people get sick, it's a big problem. It's a big problem.
And I've actually heard some speculation around whether or not office space in communities in suburbia will become more attractive for businesses to relocate to. And I love the idea of actually marketing local businesses to consumers in our town so that they actually become the hub that they can be. But I think, there is the challenge of businesses being comfortable bringing people back to the office. And I totally agree. There's just like the difference in experiencing COVID for consumers and for employees, it's the same way for leaders of businesses, and whether or not they're comfortable, whether or not they have capacity. We happened to move to Walkersbrook so that we had control of our future, and Jeremy helped us, and we have excess capacity, and that's why we were able to bring everybody back and establish social distancing requirements and cleanliness requirements so that we're able to work in a space and separate at the same time. But not everybody is going to be able to do that. But I think over the next 12 months, we'll have a better picture of what that actually could look like. But it is an opportunity to revitalize our local communities and have people live, work, and stay and play right here.
We have.
If I could,
go ahead, Barry.
I'd like to just add to what Jeremy was talking about. The statistics that I presented earlier showed, and I think Jeremy would agree with this, that retail trade was already declining well before COVID, and it's just accelerated it. I remember doing a book way back in 1979. I wrote a book called The Retail Revolution. It was part of a major study at MIT, Harvard, and Boston College where I was teaching. And in it, we were talking back in 1979 about the decline of the old-fashioned downtown department store, the Macy's in New York, the Hudson's in Detroit, where I grew up, and so forth. And it was being replaced by 2 things. One, the expansion of the discount department store, the Target, the Walmart, the Kmart, and boutique little. I think that is now seeing a second retail revolution I know that even before COVID, I was spending more of my time purchasing stuff on Amazon or other e-commerce sites simply because it was quicker and more efficient for me to do this given my busy schedule than to grab my car and go down to the store and see this stuff. I think that's going to continue. So that retail trade is probably not going to be a major factor in terms of the economic development growth of perhaps any community. You may see around, retail trade if you have an Amazon, warehouse in your town. But otherwise, I think we have to think about, what are the new industries that are going to be the critical ones for expanding our economic development base.
Thank you, Barry. We do have a quick question in the chat, and I just wanted to have it answered live. That Reading has looked into co-working spaces. Is there any analysis on using co-working spaces as satellite offices instead of companies leasing their own separate satellite offices? I'm wondering, Jeremy, if you're still with us, if you can expand on that.
Jane, I think Jeremy has parted with us.
I'll answer that one, and then I've got to go.
Okay.
So that's actually a strategy that we're recommending right now to office landlords that have had, frankly, no office activity in the last 6 months to 7 months on their properties. Is consider taking the spaces that have private offices and breaking them down and making them co-working flexible office environments. Because at this point, we're sort of changing on feels like maybe every 2 weeks we're changing right now in terms of what's happening to us. March was every day. So the pace of change is so short-sighted that it's hard to make long-term decisions about your business and your space needs, particularly if you're running a company, making a long-term commitment based on the data you have right now, because there's so much data coming in so quickly and it's changing so fast. So there is an opportunity in that space to offer flexible co-working situations. There are a lot of people, as I said, at home that just need to go somewhere. They just need to go somewhere and do their work. And so I do see that as an opportunity in the market.
All right, thank you. We have an attendee, Bruce Rosenberg, who has got his hand up to ask a question. Bruce, if you would like, you are welcome to ask your question at this time.
Yes, thank you very much. Thank you to Barry, Julie, Jeremy. I have a question, and is based upon Dr. Bluestone's, I guess it was his number one critical factor in terms of ED marketing. And the question is actually directed at Erin, Bob Lelasher, and Mark Doxer. So first, let me back this up. I am the chair of the Town of Westford Economic Development Committee. It has 3 ex officio members from the town. The rest of us are all volunteer residents. And so I'm going to ask a little bit of first, before I get to the real question, I'd like to know, how long has it been since Reading has an economic development director? That's you, Erin. So can you answer me that first?
Sure. The town of Reading has had a couple of economic development directors over the last several years. I am the second economic development director, and I have been with the town for about 1.5 years now. Okay.
So my real question is, with which I think I know the answer, and again, it's related to Dr. Bluestone's number one critical factor of ED marketing. Can you, Bob, Mark, talk a little bit about the gradient, the delta between before having an ED director and after an ED director in terms of the changes and the growth in the town of Reading?
All right, that's a great question. Bob, why don't you start?
Yeah, Bruce. I remember with our prior economic development director, we had a nice chat in Westford. It probably would have been 2016. to give you an answer to the question you didn't ask, it's all about relationships and putting yourself on the map. And that's what our two economic development directors have done the best. We've had commercial developers that work very close to Reading and drive through Reading every day, not be aware of some of the development opportunities until, a dedicated staff person could say, look, come visit with me this afternoon and I'm going to take you on a tour, for instance, of Walkersbrook down where Julie is. And, a significant developer had no idea there was opportunity down there. So it's really putting yourself on the map and giving yourself, a name, I guess, a reputation to some degree. And then, we've done a town meeting, passed some zoning changes going back 3 or 4 years, and our downtown is gangbusters in terms of development. It's mixed use. We'll see how well the commercial stuff does, but certainly the housing is attractive. This is the busiest Reading has been that I've ever known in terms of commercial development, absent some big projects maybe on the outskirts of town. So I think when you look at Reading in 2 years from now, the data is going to show a difference. Today, maybe not so much.
Maybe just to add on to that, Bob, you did a great job answering that, by the way. I kind of view it that there are kind of 3 chunks we're looking at. There are the existing businesses, and obviously supporting them is very important. And there are some initiatives taking place now to help and engage with them. Level 2 is, as Bob mentioned, the new inventory that's just coming online. A lot of it coming from the mixed use activities. And what can we do to get good people to come into those spaces? Obviously quite the challenge in COVID-19. And then the third tier really is, what are the new kind of bigger opportunities? Are there any that are out there? We don't have a lot of brand new large open space that's available, although there may be some possibilities. And there are a couple of development activities that Erin is leading the charge on in terms of taking a look at what those might be, how might we develop them, and take them forward from there. So I think there's a lot of stuff happening now. And as Bob said, we'll monitor it, and hopefully COVID will at some point be a little bit friendlier to all these activities.
Thank you, Mark. Our next question is from Lisa Egan. She asks in the question and answer section, thank you to all the knowledgeable and interesting speakers. Do you have any suggestions on what the Chamber can do to better support Reading businesses than the Reading business community? I appreciate the shout out to our local downtown shops and restaurants. Lisa Egan is from the Chamber of Commerce. So that is for our panelists. Julie, you want to step in on that one?
Sure. I think, first of all, here's hoping there's more stimulus available, and there's already conversation about a second round of PPP. So any way that the Chamber can help get word and news and information out to businesses as far as that's concerned. I like what has been raised here already is, how do we actually promote our businesses to people that are now working from home, and making sure that they know what is actually open. Is there a mechanism so that we can actually have levels of announcements to consumers in our marketplace to let them know what businesses are open, how they're open, rather than each individual business only reaching out to what it has in its database of email addresses. Just a thought there.
All right, thank you. All right, I don't have any other questions. I would prompt our oh yes, we just got another one. Thank you. And I'll let attendees, if you use the raise hand feature on your screen, I can see that, and then I can unmute your microphones. This one's also from Carl Dietrich. Is there any analysis on improving cycling and walking infrastructure and shuttles can help enable more development of offices, shops, apartments while controlling traffic, since bikes, walking, and shuttle riding would take some cars off the streets? I don't know who might want to jump in on that question. Maybe Jean or Julie, if you have some thoughts there. I know we have a long conversation going on in the community right now.
Sure, I'll jump in. Hi, I'm Jean Delios. I'm the Assistant Town Manager, and I'll give a plug for planning and the planning side of the house. We work very, very closely as a team in Town Hall, and Lots of the work that you're seeing now is being done across departments. So we work a lot with police, we work a lot with fire, we work collaboratively, and I think that's a strong element of the path forward. So what the point that I would like to make is that when we rezoned the downtown in 2009 and we made it a downtown smart growth district and then expanded that zoning a few years later, 4 or 5 years later, we decided that development and growth in the downtown was something the community was very supportive of. In fact, they were so supportive of it, it was identified in our economic development plan, which Professor Bluestone flagged for us when we had the EdSat, and we actually did an economic development plan, and we're talking about the next generation of that. So I was glad to hear that the planning effort is flagged as important. But my point is creating walkable communities, walkable downtowns, putting housing, and is nothing radically new about this. In planning circles, we call it smart growth, new urbanism. These are terms that are current, but there's nothing new about it. Having walkable communities, putting housing in the downtown, putting businesses aligned with where the people live is an old story, but one that we have really embraced in Reading. And with new residents moving in and hopefully new businesses opening on the horizon, it's a win-win for everybody. And at the same time, Jane and Erin and I and many others have been part of a working group looking at the major state highway through the town, Route 28, and how can we better design that. The road diet, which I know nobody likes that name, I'm not a fan of it, but the realignment, I'll call it, of the major spine of the state highway that runs through the center of town, looking at that in creative ways and finding opportunities to have multimodal transportation is a big project that we've been working on. And it is a trial road diet. I keep hearing people saying, oh, the road diet this, the road diet that. It's a trial road diet. So we are trying it to see if it could work. And I'm very excited about that, and very, very happy that Reading is willing to try some new things. And that's, I think, something that I'd like to leave with the group is we don't always succeed when we try new things, and sometimes there are pain points, but without trying, we're never going to get there. Thank you.
Thanks, Jean. All right. I don't have any other questions at this moment. Erin, we're going to throw it back to you for a wrap.
Excellent. Well, thank you all to our speakers this evening. And I also wanted to thank our select board members, Mark, Doxer, Ann Landry, and Vanessa Alvarado for joining us as well. We're ending a little early, but that's okay because there's a lot of other activities happening this evening in town and nationally with our debate this evening. So again, thank you all so much for coming and attending, and I'm happy to be available for any follow-up questions from any attendees. My email address is eci.reading.ma.us, and you can also find all that information online at the Town of Reading website as well. Thanks again, and good evening.